Now, to help us make sense of this, I have with me John Kanayo. He is head strategist. He would be helping us better understand what happened at the market yesterday. John Kanayo, head research and strategist, Imperial Asset Limited. Thank you for joining us, Mr. Kanayo.
You're welcome, Bonani, and thank you.
First, let's start from the currency market, where we saw the Naira depreciating by 0.2% to 420 Naira 25 kobo, and that's at the official window. Tell us more about this.
For the Naira, it's been on for a while now. Obviously, the demand for dollar at the FS window has continued to increase, and the regulator has not been able to find a solution to this. It's been a liquidity problem, and what we have seen over time, all through last week, and currently was down by, it actually dropped by 48 kobo. If you put that figure together, I think that's about 11% week on week. Yesterday again, it was down. I think CBN will continue to is the major supplier there, though we have a commercial bank playing in that very corridor. But then CBN will continue to put its feet down there to ensure that liquidity is much more available in that segment. If you permit me, I want to quickly go into the money market. Okay,
yes. Let's look at the money market, especially as we see the overnight lending rate contracting by 33 basis points to 13.7% following inflows from the FGN bond coupon. Help us better understand what happened here.
Okay, thank you so much. If you look at system liquidity, improved yesterday. It actually closed at 215.6 billion compared to what it was last week Friday at about 56, 57 billion, and that really helped to moderate overnight lending rates, which dropped by 33 basis points to such as 13.67%. Open repo rates equally dropped by 83 basis points to such as 12.83%. Like you said, inflow from matured OMO was helpful in the market, but we equally saw increase in bank-to-bank lending rate, talking about standing lending facility, which increased to 79.59 billion compared to 33.3 billion as at Friday last week. Unfortunately, the increase in liquidity didn't have major impact in the OMO market. OMO market was unchanged. Average continued to trade at continue to settle at 4.3%. At the MCV market, and that treasury bills, average yield was unchanged. It remains at 3.87%. If you move to bond market, we saw bond was marginally up. At the short end of the curve, there was sell-off, like you have pointed out, sell-off on March 2025. That's three YTM maturity. It actually dropped. It actually increased by 11 basis points. Average yield at this short end was up by 2 basis points. At the mid end of the curve, we saw demand on July 2034 maturity. Average yield here, or the yield here, dropped by 15 basis points. Average yield at the mid end was down by 2 basis points. At the long end of the curve, there was equally buying interest sale in January 2042 maturity. Yield here dropped by 7 basis points. Overall, at this long end of the curve, average yield was down by 2 basis points. Across the yield curve in the bond market, average yield was down by 1 basis point to settle at 11.63%.
All right, Mr. Kanayo, what's your outlook for the markets today as we wrap up?
Okay, if you look at OMO market and NCD market, there has been caution. Market participant has been playing this, has been having this label caution. The interest has been shifted to the caution, and we hold mid of June. I think that would be a clearest direction of what CBN wants to do in respect to MPR rates that went up to 13%. We are looking at that tomorrow. We're still going to see caution play out in the OMO and in the bond market, in the OMO and Treasury bill market. In the bond market, we're still going to see marginal demand, especially at the mid and the long end of the curve.
All right. Thank you so much, John Kanayo, Head Research and Strategies, Imperial Asset Limited. Thank you so much for helping us understand what happened at the fixed income and money market yesterday. Thank you.